Hi, I'm Kim Ford, CEO of Rise Pittsburgh, and I am excited to present the Pittsburgh Market Series update. My background actually started in the industry at the Trammell Crow Company, and then I led the Pittsburgh office of Cressa for over 10 years. And Rise Pittsburgh basically is an exclusive tenant representation firm, so we only represent business owners, never landlords. The impact in the Pittsburgh market based on the pandemic is really the work from home movement. You know, it's kind of interesting. Work from home existed for a lot of different companies for 10, 15, 20 years. And a lot of professional services companies really just never, took it upon themselves to test that. And so the pandemic really forced them to go home and to implement cloud computing services and things like that really made them think out of the box and do things a little bit differently. The major impact on the market itself is, unfortunately, commercial real estate is years behind. So you don't immediately see an impact like you would, for instance, toilet paper being missing off the shelves, or bike parts and bicycles not being readily available. In commercial real estate, people sign 5, 7, 10, even longer term leases. So people are already occupying those spaces. Until their lease rolls around, you don't really actually see how the pandemic or their work from home movement or a hybrid model is going to, impact their future leasing, because they're in a lease and it's a long-term situation. I would say that businesses have adapted and most companies have tried to work with their landlords. Our phone rang off the hook for months when the pandemic occurred and people were at home, and they asked us what to do. And a lot of them really saw, an advertisement or, something on TV that sparked the thought that, force majeure clause, or even the Cheesecake Factory announcing that they're not paying rent. And immediately companies just assumed, well, I don't have to pay rent. I have a force majeure clause. So our phone started ringing and we had to explain to these companies that, no, don't stop paying rent. Don't ever stop paying rent. What you really need to do is actually have a conversation with your landlord. So we asked them a couple questions, and the first was really, are you having major problems? And what's funny is most of them said no. So, it's like, well, then you should probably pay your rent and continue. I know it's awkward. I know you're not in the office, but do the right thing. And if you're really struggling, call your landlord. Have an open conversation. There's a lot of things that you can do in that situation, such as a blend and extend. And what that means is maybe you don't pay rent for 3 months, and we just add 3 months to the end of that term. Leasing activity has really changed since the pandemic. There's fewer deals in the marketplace. A lot of companies are trying to figure out what the new normal looks like, especially professional services firms. We are, though, seeing a continued expansion in the technology sector. Robotics, IT, AI, those companies continue to grow. And a lot of other businesses are realizing they need more technology solutions, especially if they're going to have a future hybrid work model. So those companies are growing and expanding. And right now in the Pittsburgh market, we're in the market with a large number of technology tenants. If you look at our deal flow year over year, we're not doing as many deals as we typically would at this point in the year. But we're pretty happy that people are in the market, people are growing, and people are trying to kind of figure out what's next. Oil and gas industry is definitely shrinking as well. But I would say there's not another sector that is really being hit here. I mean, from an industrial perspective, last mile facilities, industrial flex spaces, tech flex in our market continues to be in high demand. Landlords really want to fill vacancies, and in the Pittsburgh market, we have not seen a major change in the offerings to tenants. Our central business district has the highest vacancy, and landlords aren't really providing the lower rent and the concessions that I would expect at this time. So if landlords want to lease their space, I really think they're going to have to be more aggressive. I mean, we're seeing some markets and micro markets in the Pittsburgh area being a little bit more aggressive, but not what I would expect. And so in my opinion, a couple things landlords should do. Number one, figure out how to add additional outdoor space or add outdoor space if you don't have it. Buy the building next door if you have to. Tenants want outdoor space. They want to be able to get outside. Tenants are also demanding amenities. Buildings need to be amenity rich and provide a great place to recruit and retain top talent. My recommendation to businesses that are kind of trying to figure out how to find space right now, when they should look for space, is if your lease has about or anywhere less than 2 years left, now is really the time to start looking. More than anywhere, I think, and I've been doing this for 24 years, and never has been there an opportunity for companies to actually really need to look at their space. I mean, it's a great opportunity. Look at your configuration, look at the efficiency of the space, think about who has to be in the office, who doesn't have to be in the office, and really evaluate what that looks like going forward. But within the 2-year period, gosh, let's go to market. I mean, be in a position, work with a broker that is your advocate, that can help you look at the spaces, look at everything in the marketplace, and allow you to make an informed decision. There unfortunately hasn't been a lot of change or innovation in the commercial real estate industry. I call it the good old boy network. We're still and actually we're still very far behind residential. There are leaps and bounds ahead of commercial real estate. We have a tremendous lack of transparency that exists today and not a lot of innovation. And it's not because entrepreneurs aren't trying to innovate. It's because you have this network that thinks that works the way it's been working. So why change it? Why change something that isn't broken? They don't want to innovate. They want to keep continuing and finding the success they always have. So I think that until we have that next generation that comes up and that's just going to bring that adoption in technology, I think it's going to be hard to push through and break what everybody's been used to.